get into dope. So I'm on a paper trading account right now so that I can show you guys a couple of things on how to manage trades. But before we do that, let's just do again what we did yesterday, the fast-paced version of it, right? Because I want you guys to kind of see how it works without me having to explain everything that I'm doing. So we're gonna go ahead and brand new this chart. This is a US 30 chart. It's got nothing on it now. We'll go to the 4 hour, find our supports, find our resistances. Delete this. Okay. The 4 hour support resistance. Where is it? Clear support. Clear support. Somewhat clear support. Top that was respected a few times and is now a bottom. Now, why did I make these lines? Why is this my support and resistance? Let's do it really simple. Okay. Resistance, support. Resistance, support. Breakthrough. Now, the old resistance is the new support. New support. Now, kind of just did a little funky thing here, so you would have got caught a couple times, but new resistance, old support, right? Bounced off it, broke below it, came down to this one, came down to this one. But either way, it always stayed in between our zones. Broke clear through this one, but came right down to this one. Then started respecting this zone again, broke out, never came back down here. So now we are up here, and now we have used this top as a new bottom, right? It's very obvious to see. Well, obviously these lines are a little bit much, but you see what I'm saying here. Anytime it broke our zone, it just came to a different zone. When it broke this zone, it came to this zone. When it broke this zone, it came to this zone. Over and over and over and over. And that's how you want to find your zones, right? Once you've got your zones, go over to the fib level. Take your fib. We are on an uptrend. So the way the Fibonacci works, your Fibonacci is right here. It's the third tool down on the left. Fib retracement. You grab it. If you're in an uptrend, you take your fib from your swing low, which is the lowest point, which is right here. Drag it up to your swing high, which is right here. Boom. Now you've got your fib levels. Now you can start drawing zones. Do I have a fib level that's in line with a moving average? Do I have a fib level that's in line with a trend? Do I have a fib level that's in line with a support and a resistance? So again, Fibonacci, if you're on an uptrend, take it from your take it from your low to your high. If you're in a downtrend, take it from your high to your low. Fib, that's how the fib works. Now, the lower these numbers get, the stronger the zone is. 0.382 is stronger than 0.786. Lower numbers, stronger fib level. Lower numbers, stronger fib level. Okay? And so this took me a whole 2 minutes to mark this up, right? Now, as we did yesterday, we want to go through our time zones, and we want to see what kind of moving averages we have where. 1 hour, we have our 500 moving average perfectly in line with our zone. So that means for me, grab my rectangle, draw myself a zone where this line is somewhat in the middle, set my alert at the top of this zone for a buy interest. And now I will get the alert when the charts come into this zone. Doesn't mean I'm going to take it right away. That just means I'm going to start looking at it, okay? So now let's go back to Nazareth, because that's what we marked up yesterday. And for instance, we are in a zone right now perfectly.
Nala. Nala.
This is the Nala. Nala. Come on, Nala.
Oh shit, I'm sorry.
No, you're good. Okay, so we're in a zone right now on Nas, right? Now, okay, let's apply some pressure here. Let's go with Kyle. Kyle, you show up a lot. What would you do right now since we are in a zone? What are you going to look for next to see if you want to take this trade? Come on, big Kyle. Don't be shy.
Yo, I would probably wait for candle confirmation before hopping into a buy.
Okay, and what does candle confirmation mean to you? What time frame are you going to for that?
I would do 5, 15, and hour. I check
Five
them
fifteen
all.
an hour. Okay, cool.
Um,
And then is there anything else you would look for? Would you move around these charts and or move around these time frames, look for something else? Like, is there another confirmation that you're waiting for or looking for?
um, I mean, I just check to make sure there's no like huge engulfing candles. I check to see like where we're headed. Um,
Yeah. So what I was looking for you to say is you would bounce around these time frames and look for a moving average in your zone. Because we drew this zone up yesterday, right? So by the time this zone hit today, 24 hours later, these moving averages are going to be in different places for the most part. So you want to go back around and just kind of see if you've got a moving average in your area, which it doesn't look like we have. We have no moving averages in this zone. So that is -1 point for this trade, meaning we don't, that doesn't mean that I don't like the trade. It just simply means that one of my most important, one of my most important confirmations is not here, which is a moving average. I love to have a moving average in my zone. But that doesn't mean I don't want to take the trade. It just means that I'm a little more weary of it, meaning that I'm going to wait until the absolute best entry to take it so that I can kind of justify my risk on it, right? I'm not going to enter it up here. If I had a moving average in the middle of this box, I would be more inclined to take it wherever it is in this zone, but I don't have that. So what I have going for me now is a clear support in this area and this is the lowest point of last week, right? So we're about 1924.84. We're about 40 points from last week's low. Now what I don't like is that we didn't break highs on the way up. We have our 1 hour candles. We didn't break any highs. We simply came to this was yesterday's high, came up, rejected, and then didn't come all the way back up and didn't break. What else I don't like is that we have all of our 1 hour moving averages headed down, which means that our 2 hour averages will be doing the same thing. And now if we go to the 2 hour, we can see all we ever did on the way up was reject off of this 50 moving average on the 2 hour, right? Come up, rejection, come up, rejection. So we have a couple of things going against us, plus last week we absolutely melted. So that's not to say I don't like this trade. That is simply to say I want to be very, very minimal risk on this. So what I'm going to do, I'll go over to the trade button. I'm going to do 1 unit and I'm going to have to go below here. So this is where getting good at trading math comes into play. If I were to enter now, I would be entering at 953. Last week's low is 885. So that is about a 70-point difference. 70 points on one contract on Nas is $1,400. I'm not willing to risk $1,400 on this trade. What I would be willing to risk is around 700. So I will go to Nas Mini. And the way Nas Mini works is 10 Nas Minis equals one normal Nas. So if I go 5 Nas Minis, that is the equivalent of half of a Nas contract. So now I can set my price stop loss target for 700 and it will give me the same amount of points that it would have given me if I took one contract. But now instead of risking 1,400, I'm risking 700. And that being that, I can actually drag it down a little bit lower and be risking about 800 on this trade. Okay? So now I'm in a trade. My next step on this trade is figuring out where my TPs are. Now, there's a couple of ways you can do this. The easiest way, and usually what I do, is go for a 1-to-1. So if I'm risking 15 points, my TP is going to be 15 points, etc., etc. Right now, I'm in at 952, and my stop loss is at 873. So that is roughly 80 points. So my take profit needs to be 80 points. I'm in at 853, or 953. 953 plus 80 would be 1933, putting me right around here. So now I'm going to set an alert for here. TP1. And this isn't necessarily considered a scalp because 80 points on Nas is not a scalp. Once this trade gets to here, what I'm going to do is grab my stop loss, drop it here, and be at break even. Or I'm going to close and be happy with my position for the day, or I'm going to start trailing my stop loss. That's not considered a scalp. 80 points is not a scalp, so this would be more of a somewhat longer hold. Okay? Before I remove this trade, does anyone have any questions on that? Because if you don't, I'm going to show you what I do when I scalp. Amare, you had a question yesterday about contract size and stuff, so please ask away while we're on here. If you've got something you're curious about. Okay, cool. So that is how you're going to take a standard trade. What I mean by standard trade is something with a big stop loss and a big take profit. I trade gold. Okay, well, yesterday you were asking about Nas contracts. So I don't know what you're doing. Anyway, so that is going to be a standard trade. What I mean by standard trade is you're looking for a play to play out on a higher time frame. Now, let's go over to scalping. And this is what Kyle sees me do most mornings when he shows up like right away. If we're going on scalping terms, here's what a scalp is going to look like. I'm going to close this. This is just a paper account. I only open this account so I can show you guys lot sizes and stuff like that without having to wait for a proper position. So I'm going to close that, go back over to my regular Nas. Go to my 1 minute, and here's how I scalp. I risk 5 points. So what that means is what I want to do is I see this consolidation kind of forming, right? I see a consolidation. I see a bit of a breakout. Now I see we're coming back down a little bit. This is the 1 minute time frame. Very, very small proof. Very difficult to get good at because you have to absolutely snipe. I'm not going to enter this trade right now. If I was in the grand scheme of things, meaning I was on the 30 minute or the 1 hour, I have no problem entering this trade right now because I'm still in my buy zone, right? But I'm aware that my stop loss needs to be larger. It needs to be over here at the very least. If I'm sniper scalping, what I'm doing is I'm on the 1 minute and I'm waiting for precise entries, meaning I want an entry here so that my 5-point stop loss has me here, right? So I'm going to enter here, wait for here. I don't think we're going to get that while we have time left on the Zoom. We'll see. But the way that I manage those trades is if I have a 5-point stop loss, once I gain 5 points or 10 points, stop loss goes to break even. Very simple. And any way you're doing that, you can do that with a 10-point, we can do that with a 15-point stop. That's up to you. But your 1-to-1 should, or your TP1 should always be 1-to-1. If you've risked 15, wait 15 points. I do 5 points because I wait so patiently for my entry that if that 5 points breaks, it means my zone is kind of broken. And that's just me and my strategy and being very precise. That is why I'm like super in and out with the bag most days. I might risk. So I could lose like 2 trades in a row, right? Each of them being 5 points. Excuse me. If my next trade runs 15, 20, 25 points, I'm up. Very, very minimal risk is what I do when I'm scalping. Now, that's going to take you out of a lot of positions very quickly, and your stop loss is going to get hit at break even a lot of times very quickly. But if you're doing it right and you're doing it consistently, you will get your 1 to 2 runners a week. And what I mean by a runner when I'm scalping is 50 to 60 points. If I catch 50 to 60 points, and I'm usually using 4 contracts, 50 points on 1 contract is $1,000. 50 points on 4 contracts is $2,000. I'll catch those once to twice a week. And on the other side, I'll be catching $500, $600, $700. So for me, that adds up. That might not be your style, but that is what I like to do and what I've gotten accustomed with. Anytime I abandon that style, I don't have success. I've gotten used to what I've gotten used to, and I've gotten good at what I've gotten good at. That doesn't need to be your strategy. And that's why I'm going over so many different ways to take a trade. What I showed you guys prior to this is more of standard trading, how most people would trade, right? And I've just realized that for me, 1 minute, 5 point scalps is really, it's just my bread and butter. It's what I do. And that's probably because I came over from options trading and I'm used to it. But the risk, for a lot of people, it's too quick. It'll move too quick. It puts anxiety in their hearts. It doesn't do that to me. I like it. So I'm just going to see if we can kind of get a little scalp thing so I can kind of show you guys how it works. But again, this strategy doesn't work unless I'm at an absolute bottom or an absolute top. So that's why a lot of the New York sessions that you guys jump in on, we're not taking a trade. It's because we're just waiting. What I will do is if we come back up here, I will take a quick 5 point sell. So that being said, let's go back to well, let's just see what this does for a second, but let's go over to candle closure. What that means. So really for candle closure, ideally you want to go to at least the 15-minute, and you just want to see some proof of closure. So for instance, right? Let's say like this. This was kind of a fake out in a way. We had nothing but bearish 15s. We came down into our zone, wicked up. So for me, that's a great sign. This wick right here is a beautiful sign that this zone is strong. So at the end of this 15-minute candle, we closed right here. I would have entered on this and I would have caught whatever amount of points this is. Let's say 998 to 038, 40 points. It's not a bad trade. It reversed after, but you still got this wick here. You got this candle closure. Same thing going on here. Drop back down. We had a wick and we closed. For those of you that don't know, this thick part of the candle here where it's filled in is where your candle closed. This wick is where your candle came to during its time period. So that means during this 15-minute, we did come down to here, but we closed up here. Same thing with this. We did come up to here, but we closed in here. So then another bearish 15, right? We're not entering during this bearish 15. We wick up. Cool. We catch our entry here. We're stuck in a bit of drawdown for some time. Go back up. So candle closure, basically just, you want to see some wick rejection like this. You want to see some reversal. This looked really nice. Unfortunately, it did turn around afterwards, but you would have had more than enough time to move your stop loss to break even or to pull some profits, right? Sometimes this is going to be a full reversal. Sometimes it's just going to be a quick little reversal. There's no way to tell what's going to happen, and that's why protecting your capital is important. The zone was right. It just didn't get the bounce off that it needed. Came to the bottom of our zone, and now we have a nice consolidation going on at the bottom of our zone. And to me, it looks like this thing will have a nice move up to at least this area here. And that is not a chump trade, right? That's 938. I'm gonna say it comes up to 1900 flat. That's 63 points. So 40 points here, 60 points here. That's a 100-point day. On one contract, that's $2,000. So yeah, candle closure, just you don't want to enter in the middle of this thing. You could have made an argument that there's a bottom here, right? Bottom came down, bottom shot up. So there could have been an argument that there's a bottom in here somewhere. Well, there is a bottom in there somewhere, a 15-minute bottom, right? Go back over here, you see it. But the reason you're not going to enter this is because you're approaching that bottom in the middle of a very, very strong 15-minute fall off. And if we go to the hour, it'll show you even stronger what I mean by that. Right? Like, look at that. You're never going to enter anything in the middle of one of these candles like this, especially after one candle down, two candles down, three candles down. You just want to, like I said, you want to wait for a little bit of candle confirmation. Let the candles show you what they're going to do. Usually what you would want this to look like in a perfect world. You have your 1 hour shoot down into your zone. 1 hour closes, as it did actually right at the bottom of the zone. And now for this next hour, you want to see something like this. Maybe come back into our zone. Cool. Now we have our candle confirmation. Let's go for the moon, right? Just let the candles show you what they're going to do before you assume what they're going to do. We are in a zone. We do have confirmations. We do have an undersold TDI or RSI, depending on what you're using. But that doesn't mean anything. This is where patience comes into play. And you just want to let the candles tell you a little bit of a story before you put all your eggs in a basket. And what's funny about this is that this just happened. If you would have entered at the top of this zone, you would have been entering in the middle of a very bearish one candle, probably would have got stopped out, and all it did was come to the bottom of the zone. So if you were patient, you would have got an entry in the bottom of the zone, and you would have been teetering in and out of profit for the last, 20, 30 minutes, but mostly in profit. Whereas if you enter with a trigger finger during a candle like this, now you're stuck in all this drawdown. And you're stuck in drawdown for no reason because we never even left the zone, right? The zone isn't broken. If you practice patience, you would have had an entry at the bottom of the zone instead of at the top of the zone. Because now if you lose this trade, what sucks about it is that you weren't even necessarily wrong. You were just early because you didn't wait for confirmations. So this trade could very well just come down to here, something like that, right? We're still in the zone because this is just a large wick. We haven't broken this wick, and until this wick is broken, this zone is not dead. So maybe it comes down to here, maybe it comes down to here, but that doesn't matter if your entry is at the bottom of the zone, right? You're fine with this. If you're up here, you've already lost this trade, maybe lost it twice. You might have re-entered, gotten emotional. So wait for 1 hour candle closure, and if you're not going to wait for 1 hour candle closure, at the very least, wait for 15, preferably 30 minutes to an hour. But that's just what candle closure means. Let a candle close, let it do its thing. See if it tells you a different story at the beginning of the next candle. And if it doesn't, just simply don't take this trade. A zone is not enough, right? So that's what Kyle said earlier. He would wait for candle closure. And like I said, I would go through different time frames and see if there's a moving average in this area. There is not. No high time frame moving average. All we really have here is a support and resistance. It is a high time frame support and resistance, but it's still just a support and resistance. There's nothing else going for it. Yeah, we don't have, like I said, we don't have a moving average until down here. And that's about 150 points away. You don't want to be in 150 points of drawdown. Now, we could more than likely, maybe there's a fib level right here, so that might give you another point. So we do have a somewhat fib level, but we've already passed that fib level, right? So this, if you're thinking about it in a point system, this trade really only has 1 point going for it, and that's the fact that it's support resistance. What you want to do is have a couple points on a trade, a couple of reasons to take it. Support resistance, moving average, Fibonacci level, TDI or RSI if you're using it. And yeah, I wanted to go over today with you guys on candle closure. If nobody has any questions on how these lot sizes work, then that's just where we're going to cut the video for today so that I don't overwhelm with a bunch of information in a quick video. Today will just
Do
be
you
closure. Yep.
do you have like a calculator you use online when you, or do you just stick with TradingView for lot sizes and calculation?
I just know the lot sizes, but if you go into the Discord and you go to board and caffeinated page and you go to intro to futures, he has a few right here. So he's got Nas, he's got S&P, he's got oil, and he's got gold.
Great, thank you.
Yeah. Yeah, but for me, I've gotten accustomed to how they work. Numbers are my thing. I remember numbers more than I remember anybody's name or what they stand for. But yeah, so just write that down. What I do a lot is until I remember something, I have a sticky pad on my laptop and I just look at it and then I remember like, oh, right. So, okay, well, let's cut it here for now. Again, I'm going to upload this to YouTube. I speak really fast, so you're probably going to have to watch these a few times until certain things really click. But I'm not trading this week. I didn't feel like trading this week. I have some other things going on that I want to be more focused on. So I've decided to take this week and do it a little bit more educational. And hopefully we can start next month all on the same page with how to take a trade, how to manage a trade. Let's go over that actually real quick, managing a trade. I'm not going to be able to show you guys in real time because it is 10:30 now, so I'm not going to get the type of movements that I usually go for. But let me find like a good time frame where you can see really good candles. Okay, let's do it like this kind of. Oh, running out of time already. So, okay, let's just say that my entry was right here. Okay. So let's say this is Nas. Let's say I used a 40-point stop. My TP1 should be 40 points. 1-to-1 TP1. 1-to-1 TP1. So that's what this trade would look like. Now, the ways you can manage this is when you get to 1-to-1, close your trade. Or this for now. This yellow line is my entry. This yellow line is my stop loss. Once I get to 1-to-1, I can close the trade or grab my stop loss, move it to break even. TP2 being 1-to-2, and you can see all this right here, your risk to reward ratio. 1.0 means 1-to-1. So if you drag that up to a 2.0, there's a 1-to-2. So let's say once I get to 1-to-2, I'm going to drag my stop loss up to 1-to-1. Now, worst case scenario, I'm leaving this trade as a 1-to-1. Best case scenario, it keeps running. And you can kind of just repeat that over and over, right? 1-to-3 could be your TP3. Once you get to 1-to-3, move your stop loss up to 1-to-2. And that's one way to kind of manage your trades and find your stop loss or find your take profits. What I usually end up doing, because I have my trades planned out before I take them, is I see my entry point, right? So the ideal entry point would have been right here because you've got a bunch of 5-minute candle closure, and we saw some candle closure on the 15 and the 1 hour. If I took this entry here, my take profit for me would be the next point that I see this thing, we're on the way up. So the next point that I see this thing resisting from on the way up, which to me would be right here at the top of these wicks. So this would really be my my TP1 if I was doing a longer hold strategy, not longer hold, but you know what I mean, just going for 100 points or so. So maybe TP1 right here, maybe TP2 right here. And then if it breaks this area, you know, most likely come up to here, but then you have all these moving averages too. So maybe try to put TP3 at a moving average that it likes to respect, like the 50 or the 200. Another way you can do this is simply have your take profits at moving averages on the way up, but that's less likely to work out in your favor. I would go for either the standard 1-to-1, 1-to-2, 1-to-3. Just map that out with your tool, right? You have your long position and your short position, or base it off of previous support and resistances on a lower time frame. If you're intraday trading, meaning swing trading, meaning holding for a few weeks or days or whatever, your strategy is going to be totally different. I don't do that, so I can't tell you the proper strategy for that. And just to go over it one more time, if I'm scalping, I'm using 5 to 10 points. My TP1 is 5 to 10 points. TP2 20, TP2 or TP3 30, et cetera, et cetera, et cetera, et cetera. And yeah, I usually, take full profit at TP2 or so. That's just me. That's what works for me. I'm cool with $1,000 to $1,500 a day. If I have 2 contracts in, so if you do something like this, right? Say you've got 2 contracts, let's just use like $1,000 for now. Again, paper trading, this is not real trading, so please don't take any of these trades. What you can do is you can take your position. Now you're in 2 positions, right? Instead of 1. So you can always come over here. I'm in a buy for 2 positions. I can go over to sell. I can sell 1 position, and that'll take me out of 1 of my contracts. Now I'm just in 1 again. So a lot of you aren't going to be able to trade 2 contracts comfortably because, as you can see, the price moves very, very quick, and it is a lot of dollars. Another strategy that you can do, go over to micro, and this is just for Nas. Remember, you have to figure out these calculations for yourself if you're on gold or if you're on US 30. So seeing that 10 mini contracts is the equivalent to 1 standard contract, what I can do, let me try to explain this a little bit differently. If I was going to trade Nas on 1 contract, but my TP strategy is to pull profits at every TP, then instead of putting all of my eggs in 1 basket, because if I'm in 1 contract, I can't peel profits. All I can do is trail my stop loss. However, if I go to mini, I can enter 10 contracts, right? So now I have the same risk capital as 1 contract, but what I can do is set my TPs. Whoops. So say I've got TP1, TP2. When I get to TP1, I can go over to sell. I can sell half of my position and have half running. If you want to do it like that, that's another way to do it. So you have your TPs mapped out with alerts. Once you get to a TP, start peeling contracts. But this is only going to work on mini for you guys on Nas because Nas 1 contract moves so gnarly. You can do this on US 30 a little bit different because the numbers are a lot lower. US 30, if I'm not mistaken, it is $50. No, excuse me. 10 points on US 30 equals $50, whereas 10 points on Nas equals $200. So your risk is cut into 1/4. So if you did 2 contracts on US 30, it would be half the risk of Nas. So you can pull 1 contract or et cetera, exactly what I'm showing you guys right here. If you're going to do this strategy, all you really want to do is wait for the charts to hit your TP1, move your stop loss to break even, peel half of your profits, and then do not trail your stop loss. Just kind of this is what I like to call leaving a runner. So if I had 10 standard contracts like I did at the beginning of this trade, and my entry was, let's call it 915, and we ran up to 970, that's 55 points. That is $1,100, right? So if I was in 10 contracts here and this chart came to here, I'm up 1100. What I'm going to do is pull half of my profits, meaning 550, take my stop loss. For all intents and purposes, here's your stop loss. Chart goes boom, boom. I'm up 1100. I pull half of my contracts, 5 contracts. I have secured $550 on the day. I'm going to take my stop loss. I'm going to move it here, and I'm just going to let these 5 run. Maybe you'll let them run to TP2 and want to close out fully. Maybe you're like, cool, $550 is not a chump day. So now I'm just going to take my odds, and maybe this thing will run all day. Maybe it won't, but maybe it will. Either way, doesn't matter to me. I've pulled 550 today. On some days, that's just going to leave you with 550 over and over and over and over. But on some days, you're going to forget that you're in that trade. You're going to go about your day. You're going to look back down before your market closes, and you're going to be like, oh shit, I'm up 3 fucking bands. And I'm in this risk-free. Risk-free, 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 risk-free. Name of the fucking game, ladies and gentlemen. I don't care what anyone says. Well, for me, name of the game, risk-free. I don't want to risk capital that I don't need to risk. And that is also why I do fundeds. Because although it is a little bit harder and a little bit more work, I'm risking at the end of the day, if I have a $150,000 account, I'm really only risking $230. That's what I put into it, right? So who can, like, if I blow 4 accounts in a month, I blew $1,000. Sure, that sucks. And I mean, it's not going to happen, but it's $1,000. Whereas if I put 5, 6, 7 grand into this and I have a bad week, it's just, for me, the risk is I'd rather protect my capital. Anyway, great Zoom. We went over a lot. I will upload this on the YouTube. This was a really good teaching Zoom. And please make sure to watch it until you understand it, ladies and gentlemen, because I talk like a fucking hamster on crack. So continue to watch it. We will go over something new tomorrow. And this is going to end off here in a second. So, gra, 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 gra.